Community Investment Corporation, and I'm going to go ahead and hand it over to Danny Neef, who is our Executive Director.
All right, thanks, Jenny. Thanks everyone for joining to learn a little bit more about the Mortgage Credit Certificate Program. I'm just here really to welcome you and to introduce you to CIC first, if you're wondering who we are and sort of how we got involved in this. Jenny, can you go to the next slide? It's not going. That's okay. I can talk about this anyways. Right now, it's still on the introductory slide. So basically, Community Investment Corporation, we are a 501c3 nonprofit. We're actually a support organization of the Pima Industrial Development Authority, which is one of the ways that we are involved. They're the ones who actually apply for this funding for us for the Mortgage Credit Certificate Program. We are basically an economic development, economic empowerment nonprofit. We've been around since 1996. And what it is that we do is we really look at access to the economy, and we do so through three different programs. One is education, one is entrepreneurship and capital access, and then, of course, the wealth building that comes through homeownership. And we run a number of down payment assistance programs, including Pima Tucson Homebuyer Solutions program, as well as facilitating all the home funding, including all the home funding for both Pima County and Tucson. So that's where we sort of get into this. We have been running the Mortgage Credit Certificate Program along with one of our sister organizations for over 20 years here in Pima County, and are now looking to expand this opportunity statewide. Not every geographic area has a Mortgage Credit Certificate Program, so that's part of what we're trying to do as well. So I think I'm going to turn it over to Patty Gonzalez. She is our Director of Homeownership Services, and she's going to go through the details. She'll also introduce you to Mario, who's one of our staff people that works on this. But again, we are just trying to give more information about how this is an important tool for first-time home buyers. And also, just so that you know, we work with everybody from individual clients themselves, but oftentimes we're getting clients through real estate agents and brokers. We're getting through mortgage lenders. We work with nonprofits and government agencies. So we work all across the spectrum. There is a way into this program for anybody, no matter what part of the home ownership process you are basically in. Okay, Patty.
Great. Well, welcome everybody. I appreciate you guys taking your lunchtime to be here with us. My name is Patty Gonzalez. I'm Director of Housing Programs at Community Investment Corporation. I have been with CIC for over 4 years now, but I have actually been administering the MCC program since 1996. The program's been around since 1991. And so this is, I like to consider my baby. And again, thank you guys for being here. I am not sure that you guys can see the PowerPoint at this time. I know they're working on it, but there it is. So while they get that going, I'm going to talk a little bit about what the Mortgage Credit Certificate is. Essentially what it is it allows the program participant to claim, here we go, this is what I'm talking about. Thank you so much. So allows borrowers to claim a tax credit that reduces their federal tax liability, saving them money. MCCs are issued by the Pima County IDA, which Danny talked a little bit about this earlier, and allows program participants to claim 40% of the interest they pay as a tax credit. Okay, so later on, we'll talk a little bit about the difference between tax credit and tax deductions. So up to $20,000, I'm sorry, up to a $2,000 cap. Okay, 40% of the mortgage interest paid on their mortgage. These credits can be claimed year after year as long as the borrower lives in the home. So the program is good for 30 years, as long as they have a mortgage. If the MCC recipient doesn't have a tax liability for any particular year, the credit can actually be carried over 3 years. So if they're not filing income tax returns, especially right now during the pandemic, some people hadn't been working, they're not even filing tax returns, the credit can be carried over for 3 years. And lastly, I put a note on here that refinancing is allowed. So, and the homeowner can keep the certificate. All right, Jenny, next. So I'm going to talk a little bit about the difference between tax deductions and tax credits. Okay, so tax deduction reduces how much of your income can be subject to tax. So normally when you have a home buyer purchasing a home, they can actually write off the interest they pay as a deduction. However, IRS gives us such a high standard deduction that most people are not writing off their interest as a deduction, and they're using the standard deduction that IRS is already giving us. So versus this particular tax credit, this tax credit directly reduces the amount of tax you owe, giving you a dollar for dollar reduction of your tax liability. This means that the $2,000 tax credit saves you $2,000 in taxes. So at the bottom, you'll see here which is better. Tax credits are better because they save the borrowers more money. All right, Jenny. So how the mortgage credit certificate works. Okay, the applicant must apply prior to closing. So firstly, that's most important. We don't want to slow down the closing process at all in any way, but we definitely want to make sure they do apply prior to closing at some point. If approved, they pay a fee and they're provided a paper certificate that can be used to claim a yearly credit on their federal tax returns for up to 30 years. So in this example, this is how it works. And this is primarily what we use when we're teaching either lenders or realtors or home buyers how the program specifically works. This is primarily how we show the program benefit. So if you have a loan amount of $125,000 at a 4% interest rate, this particular home buyer is going to pay $5,000 in just interest alone. And earlier we talked about being able to write off that $5,000 as a deduction. Okay, so that was a separate subject. What this program is going to allow the home buyer to do is claim 40% of the interest they pay as a tax credit every year. So in this example, 40% of that $5,000 is a $2,000 credit. So we use this example because $2,000 is the max that the home buyer can claim, but it is good again for 30 years. Okay, Jenny. So here, the collective savings for a 30-year mortgage. So here we're looking at a $200,000 mortgage at 5%. Over the 30 years of using the program, your home buyers will save over $50,000 in tax credits. Okay, Jenny? So here's a quick tax example. When we sit down with the home buyers and they're applying for the program, we will actually show them the benefit of the program on their particular tax return. That way they can see exactly how it works in their case on their actual tax return, because the program requires us to collect 3 years of tax returns, and we'll show them every year how it's going to benefit them. So in this example, I know it's kind of a small slide, but on the first one, you'll see this particular person, they made $32,000 a year after their deductions. So you'll see on line 40, where we're talking about standard deductions and itemized deductions, you'll see this person took the standard deduction, and the standard deductions are so much higher now that most people are going to be taking the standard deduction and not itemizing. The benefit of this program is that the credit actually kicks in later. So you'll see in this particular example, this person has a tax liability, we'll say, of $2,900, but they didn't have a tax credit. They didn't have the $2,000 tax credit. So you'll see on line 64, they had $1,000 withheld from their pay stubs, which then gave them a refund of $97. Now, if they actually had the tax credit on the example on the right, you'll see here the same person with the liability of $2,900. So IRS is saying, we want from you $2,900. Now, if they have this tax credit, this $2,000 actually kicked in here, $83.96. It's a tax form we're going to send the home buyer every year in January. And then this particular person claimed the $2,000 credit. So now IRS wants $900 from them. But this person had that same amount of money, that $3,000 taken out of their income tax, out of their pay stubs. It was withheld from their pay stubs. bringing their refund up to $2,000. So most people tend to have more money taken out of their pay stubs to help cover what IRS is going to keep from them, which is why most people get refunds regardless. So that's where we try to sit down and with each home buyer to show them exactly how it's going to work on their income tax return. So I know this is a quick explanation, but it's something we can sit down with you guys individually if you want to do separate type trainings and go over this more specifically. Okay, Jenny? Okay, so now we're going to talk a little bit about the program itself. Okay, so all types of properties anywhere in Arizona. Currently, it's excluding Maricopa County. We're hoping that sometime next year, which is right around the corner, we will start working with Maricopa County, but currently the program is statewide excluding Maricopa. Now, there are what they call target areas. Okay, target areas are known as economically distressed areas, and those are determined by census tract. So for instance, the census tracts we listed here are specifically for Pima County. On our website, we actually have the census tract for the entire state. So if you have a person that's buying in a target area, they can meet different requirements. For instance, if you buy in a target area, you do not have to be a first-time home buyer, and your income limit and purchase price limits are higher. So those are your benefits of purchasing in a target area. Otherwise, everywhere else is considered a non-target area. Okay, Jenny? Okay, so now program eligibility. Okay, so the program is for first-time home buyers, but what is defined as a first-time home buyer is someone who's not owned a home in the past 3 years. And there's also exceptions to being a first-time home buyer if you're a veteran or if you're purchasing in a targeted area. Okay, those veterans and purchasing in a target area do not have to be a first-time home buyer. All types of homes, again, are allowed. So single family, manufactured, condos, duplex, townhouses, and then all loans are allowed. Okay, it goes with any loan product, your FHA, VA, USDA conventionals, and it can also be combined with every other product. So if you're applying for down payment assistance, for instance, through the PTHS program, which is also considered a loan product, the MCC can be combined with any product, okay? There is household income limits and there are purchase price limits. We have put in here the website where you could find that information, and later on we will actually send you guys a flyer that talks about all the income limit and the purchase price limits that are determined by family size and the county that they're in. Okay, Jenny? Okay, there are fees to get into the program. There is a one-time program fee. So it's an initial fee when the home buyer is applying. Okay, it says here, if it can be collected at closing, that would be great. If it could be included in the closing costs, it could be collected at that time. But we do offer payment plans of up to 6 months. So right now we are working with home buyers that can give us $50 per paycheck. Right now we are collecting a little more because we're getting closer to the end of the year, so they can start claiming their credit as of January. But this fee is something that we can work on collecting and try to stay out of the closing process if possible. We try to stay out of the CD if we need to, because we do not want to slow down the closing process in any way. And then there's also an annual renewal fee. This fee won't kick in until the following year of the home purchase. And it also prorated for the first year. So for instance, someone that is purchasing right now, they're not going to pay a whole lot of interest this year. So they're not going to yet see that benefit of the $2,000 credit. Okay, so that $100 renewal fee for our current people getting into the program, they actually won't see that until January of 2023. Okay, so what this fee does, it supports administrative expenses. We do IRS reporting, annual check-ins, things like that. We actually send this notification and the tax form to the home buyer every January and explain the best way for them to claim the credit. And we also offer free tax preparation for certificate holders. So that's part of the cost involved for that annual renewal fee. Again, if for some reason the home buyer did not claim the credit on their income tax returns, we will actually waive this renewal fee for the year that they were unable to claim it. Okay, Jenny. So this is a great sheet that I like to share with a lot of our lenders and realtors, because this is how we talk about how everyone can benefit from the program. So this is like the win-win sheet. So the first one talks about, which we talked about earlier, how does it benefit your home buyer? Your home buyer is going to get this $2,000 credit for the next 30 years. Okay, so that's an excellent selling point. So as long as they're paying interest on a mortgage, 40% of that interest, cap at $2,000 per year. Now, when we're talking to lenders, what the lender can do is they can actually use that $2,000 tax credit and they divide it by 12. That ends up being $166.67 per month, which they can include in the loan application as extra income. So where this benefits your home buyer is if maybe they have a car payment that's a little high, they have student loans, credit cards, when we're dealing with ratios, where ratios are too high, by them plugging in this extra income, they may be able to save the deal. Okay, we have that happen quite a bit where someone may not be able to get qualified or the deal is falling through. A lender will plug in this $166 per month for the home buyer, and it usually will save the deal. Okay, so this is extra income to offset debts, and where this will benefit a realtor possibly, or and even your home buyers, is in today's market, as the prices are higher, maybe they need this extra income from this tax credit to help them qualify for more house. Okay, so that's the next section at the bottom here. When we're meeting with your home buyers, we let them know, okay, this income is being included in your loan to help you qualify for maybe more house. Okay, so what we can tell the home buyer, because you're getting this tax credit, you don't need to have as much money taken out of your paychecks. So we will sit down with the home buyer and explain to them, if you're paid bi-weekly, you can go tell your employer, I'd like to take home $76 more per paycheck. Okay, almost $80 per paycheck. And then we explain, because they're being able to take this much money home more every paycheck, that's going to help them make that mortgage payment. And then at the bottom where it says the $166 per month means more house. Okay, so this would be, an excellent selling point for maybe if a realtor is in the process, and right now with today's market, you might need that extra $10,000 more house. This might get you there. Okay, so that's the benefit for everyone involved in the process. Okay, Jenny? Okay, so how to apply? The MCC program is administered by Community Investment Corporation. Okay, application details can be found on our website. You can also email the MCC at cictucson.org. We specifically have a website, an email, and a phone number here in local phone number 520-462-4MCC for people that are interested about the program, anyone that may have questions. And earlier, Danny talked about Mario, which we bypassed. We'll maybe get back to him at the end there. Mario's the one that actually is hands-on administrating the program, meeting with the home buyers, responding to this email and this phone number that is just for MCC. And we have Mario that's just processing MCC. So that's another benefit of the program is, although CIC is very busy, we have one person that this is all they do is work on this particular program. That way, if we have any last minute requests, any urgent, I need an approval letter today because this deal fell through, we can stop what we're doing and get whatever it is you guys need. And our turnaround time is easily 24 hours. The home buyer can meet with us via Zoom. They can submit the paperwork. They can upload it through the website. They can come in person if they're comfortable, again, coming into our office, because our office is open and the MCC department is here physically in the office. So they're welcome to come in and apply, and we can turn around an approval letter within 24 hours for the program. Okay, Jenny? And also real quick, before I move on to this slide, when we meet with the home buyer, we pretty much get everything done. Okay, we get everything done that we need to get done and signed and notarized while they're here with your home buyer. So that way later on, the lender or the realtor isn't worried about, are you guys still missing this document? Do I need to get the buyer to sign anything else? There is nothing for your seller to sign, anything like that. Like I mentioned earlier, we try to stay out of the closing process because we don't want to slow that down in any way. So just to let you know, we try to knock everything out, get everything the program explained, everything signed when they come in for their application. Okay, so why should I recommend MCCs to your borrower? Okay, so there's over $50,000 of savings for homeowners over 30 years. Okay, so that's another thing we try to explain. Most people think there's this tax credit and they may think it's only a one-time tax credit, but it's actually good for 30 years. So even more savings if your loan amount is greater. Okay, again, $2,000 cap is pretty much where everybody's at this point, based off the price and loan amounts in these times. And then it builds trust. It shows your borrower that you truly care about their financial well-being. CIC will feature you on our website when you refer 10 homeowners who receive an MCC in a calendar year. Okay, so that's something we've been doing for the last couple of years as lenders or even realtors are referring home buyers that actually get into the program. We feature them for an entire calendar year on not only Facebook, we give Facebook shout outs, but we put them on the website because again, the MCC has its own website. And then it's a unique opportunity to help Arizona residents. Okay, the PIMA IDA program is one of only a handful of programs in the country providing this support. Okay, so I get that question all the time, is this available in California or anything like that? There's very few states that offer this program anymore. Okay, so huge shout out for PIMA IDA for providing the mortgage credit certificate program. Again, they have actually been funding this program since 1991. And they currently also are funding the Tucson Homebuyer Solutions, which is the down payment assistance program, which we see a lot of people combining the down payment assistance and the tax credit program. Another notice in here is there no classes required, because that's always a big question with the MCC program, is we meet with the home buyer usually just that one time, get everything done while we need it, and then the few things that are pending at closing, we will get the closing paperwork from the lender, and then the fee if it's collected at closing. If not, we make payment arrangements with your home buyer, but we try to simplify the process as much as possible. And it will not slow down your closing process. Applicant may apply after a purchase contract has been signed, but before closing. Okay, so again, we just want to make sure we get them in the door before they fund on the loan. Okay, Jenny? Okay, so we understand that explaining the benefit of this program can be tricky. You know, I've been administering the program since 1996. It's definitely a hard sell to potential home buyers. So we focus on sharing the information with lenders and realtors, hoping they'll be able to share the information with the home buyers because they will always see the home buyers, where CIC doesn't necessarily get in front of working with the home buyers until they're told about the program. So marketing is a little difficult for us when we're trying to reach the home buyer. So what we have coming up here is we've had a video made, and this might be something that you guys can share, you know, to your home buyers, or, you know, if you're presenting a class, I can go to the class, but this might be something that we're hoping is going to make it easier to understand the tax credit program. All right, Jenny. I didn't know.
Are you buying a home? Would you like to save up to $50,000 over the life of your mortgage? If you are a first-time home buyer or a U.S. military veteran home buyer, enrolling in the Mortgage Credit Certificate Program from Community Investment Corporation can help you save up to $2,000 per year. How? A Mortgage Credit Certificate, or MCC, allows homeowners to claim a special tax credit every year, reducing the amount of their federal income tax. This is not a tax deduction, but a dollar-for-dollar tax credit. Homeowners can claim 40% of what they've paid in mortgage interest throughout the year back on their taxes, up to $2,000. This tax credit is available every year that you continue to hold a mortgage and live in the home. It can add up to a savings of over $50,000. Let's take a look at how it works. After calculating your taxes, suppose that you owe $3,000 in federal tax. With the MCC program, you can take a credit up to $2,000 against these taxes, reducing the amount that you owe to just $1,000. It's that easy, even if you are owed a tax refund. For example, let's say you owed that $3,000 in federal taxes, but $5,000 was withheld from your paychecks throughout the year. Normally, you would be owed a tax refund of $2,000. But with an MCC, you can still claim up to $2,000 against your taxes, which increases your refund to $4,000 instead. And saving money isn't the only benefit. Enrolling in the Mortgage Credit Certificate program can also increase your buying power when qualifying for a home loan, helping you to purchase a home that might have been out of your price range before. Talk to your mortgage loan officer to see if this is an option for you. So, who can enroll in the MCC program? There are a few qualifications you must meet. First, you must be purchasing a home in the state of Arizona. Second, you must be either a first-time home buyer, which means you haven't owned a home in the last 3 years, or you must be a U.S. military veteran. And finally, your annual income and the purchase price of the home must fall below certain limits. These limits may vary by county, and the most up-to-date information about program limits is available online. If you think you will qualify for the MCC program, visit our website to apply. Applications must be received before you close on your home. Learn more at cictucson.org/MCC. The CIC stands for Community Investment Corporation. We are a financial empowerment nonprofit, and our mission is to give all members of our community access to the knowledge and financing they need to pursue new opportunities. The Mortgage Credit Certificate program does just that. With an MCC, first-time and veteran homebuyers can put more money in their pockets for years to come.
Great, Jenny. So I love our new video. So everything I just went over, we try to get into that video. Another cool piece about that video is a lot of those drawings are actually CIC employees and families. And our voice person is actually Jenny Grable. And we do actually also have it available in Spanish. So all our documents, our employees are bilingual, our videos are in Spanish, available in Spanish also. And so thank you for your time. I don't want to keep anyone too long, but I do want to give time for questions. Again, we've put here the MCC website and the MCC email if you guys have any questions, but you're always welcome to reach out to me if you have any questions, or again, I'm available for trainings or lunch and learns, or if you put on any kind of home buyer presentations, I will be happy to attend those and explain the program. We can get it explained as quick as 15 minutes or an hour if we want to go into tax returns. And now we have our video available. So I hope that's going to be helpful.
Patty, one question that came in during the presentation was, does the home buyer have to qualify every year? So I thought everybody might want to hear the response to that.
Great question. They do not. Once they are in the program, they are qualified. The certificate is actually good for 30 years. So they do not need to meet income limit, purchase price limits. So for instance, if they refinance, we're not looking again at their loan amount, anything like that. So once they're in, they are in.
Perfect. Any other questions? Feel free to unmute. Feel free to turn on your video and show us your face. Or maybe we just did such a great job of answering Patty. That was perfect.
Awesome.
Okay. No questions? Danny, did you want to say anything?
I just want Mario to get a chance to show his face.
Oh, please, yes.
Really, we talked about him. That's Mario right there. Mario, do you want to say a quick hello?
Yeah, I just want to say a quick hello to everybody who attended this meeting. It was we were very happy to see you all here, and we are here to help. Let us know if we can do anything for any of you or your clients. We are here to help. We're here Monday to Friday from 8 to 4:30. So please send us as much of your borrowers as possible. This is a great program, and they will benefit for quite a bit for 30 years. So don't let this opportunity pass by. So thank you.
Thanks, Mario. And,
Yeah.
and I do think we just, we're invested in home ownership. We're invested in people building wealth. And so whatever we can do to support you in that and helping to get more people to take on the MCC, again, we think it's really beneficial. And again, we just want you to know where we're coming from on that. And we hope that it can also help those who are on the business side with their business. And that's why we try very genuinely to thank those who refer people to the program. We want you guys to take credit too for taking, the time and effort to really help and care about your clients.
We have had a couple of questions come in regarding the PowerPoint. Absolutely, we can share the PowerPoint information with you. It would just exclude the video because that's challenging to share, but we can share the video link, the YouTube video link, because we have it on YouTube. And then the second question was, this can be used with the Diamond program, correct? That's coming from Michelle Ingram. Patty, do you know the answer to that?
As far as I know, it can be combined with any program. Not sure what the Diamond program is.
It would be, it would be good for you to check with any local program, but here things like it can basically be combined with any other down payment assistance, subsidy, those types of things. It would be, you would want to just double check, I think, and we can certainly help that if you're using it with a different program. We're not totally familiar with the Diamond program ourselves, but would love to figure out what that is at some point.
Yeah, you did mention in the chat there, I saw that it is a down payment assistance program, and I've not had any down payment assistance program not allow the MCC because we do stay out of closing. There is no lien. The program is not anywhere in the paperwork, the loan paperwork. So essentially the program doesn't even know necessarily that the buyer's even getting into the tax credit program. So more than likely it would be allowed to be combined.
Yep.
And also just a reminder that it is statewide, okay, excluding Maricopa currently, but we are looking to expanding into marketing into the rural counties. So if anyone does any business out there, we'd love to collaborate and get the program out to the rural communities because there's plenty of money for the next couple of years for the program. So I look forward to working with some of you to help us market and get the funds spent.
Patty, one question. Oh, go ahead. Oh,
No,
did you say 3 years tax returns? What if they only worked 2 years was a question.
So what the program requires them to submit 3 years of income tax returns, but if they didn't file, if they're not required to file, then they do not need to submit them. They would just actually sign a form that says they were not required to file. But if they did file, we do need to collect the 3 years. Otherwise, they can get a copy from IRS or a statement from the lender. The lender can actually pull transcript tax transcripts, so we can also collect that.
Okay, great. If there are no more questions, I think we'll wrap things up.
Great.
Thank you all so much for joining us. We will follow up with some information for those of you that attended via email. We have your email addresses. Patty, thank you for the excellent presentation. Of course, Danny, thank you for joining us. And Mario, thank you so much. We wish you all a wonderful day. We left our contact details in the chat, and we'll also be following up with you via email. So thank you so much for your time, for learning about the program today.
Thanks, everyone.